Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 22nd at 11:48 a.m. And this is the shittiest title of a stream ever. Don't be fooled by macro conditions that are continuing to deteriorate. Let's do a better title. Let's change the title. What's the next asset to go 1000x? We're going to give BitBoy a run for his money. Could you imagine if I did content like that? I'd be so bad at content like that. It's not that I like to talk about doom and gloom. I like to talk about markets the way they are. And there was very much a fair amount of times where, much time that I talked about markets very excitedly, euphorically, optimistically. We played these markets for years. Remember Polygon days? It was Matic back then, and it was fun. That was fun stuff. So I'm not doom and gloom, boys and girls. I just want to actually have money, so when there's another bullish time in the market, I could actually play with money and not have nothing left. So the whole point of a stream title like this is the macro conditions are completely collapsing. The whole freaking economy looks like it's going to roll over and die. Like it just ate some bad food and it's shitting out bad things. It's horrible. Even the Atlanta Fed GDP now is at 0. I mean, you can't make this shit up. Do I have this still open? Let me pull up the main screen. Pretty sure I got the Atlanta Fed. Yeah, look at that shit. It's at 0. It's at 0. It's at 0. The economy is dead. People are broke. Who the hell's paying rents at what they are? I don't know what the hell anyone thinks is going on from a positive standpoint. The politicians get up on TV and the Fed governors and even the chairman get up on TV and they're telling a story. You know, it's not like we're making money hand over fist. The people in the stream right now, are we making money hand over fist like we used to? Are we rolling in the cash like we used to? No, we're not spending money like we used to. A year ago, a year and a half ago? No, that money's gone. The easy money's gone. And it's, I would say, sure, there's always hard money. Meaning there's always money that could be made doing very difficult things like timing the market and doing crazy ass technicals and being lucky with leverage. So the hard money's always there, but the easy money's not there. And that's the whole point of the stream. The easy money's not there. Don't be fooled. Because the Fed itself, the Atlanta Fed, says the economy's freaking dead. They are saying, shut up, go to work, you're fucking broke, go home, you have no money left, stop buying shit. That's basically what they're saying. They're a bunch of dicks at the Fed, they really are. So we got a nice little bounce over the last day or so. Curve made its way up to previous support. So this is support flip resistance territory, so that's actually quite disconcerting. But there's a little bit more room to run, so we can see prices stabilize. Just because the economy's fucking dead doesn't mean shit has to keep going down. So it's nice to see support flipped resistance right here. It's not nice to see. This kind of sucks. But this is nice to see. It's nice to see the TWAP hold as support. So it never really held as resistance much down here at this particular 53 cent to whatever 70, 75 cent region. Didn't hold as any resistance, actually. I mean, I guess you could consider June 22nd, June 17th, sorry, about for 5 days ago. That was a little bit of resistance, and it just broke down, but there was no resistance pushing back above it, and now we have a previous resistance flipping support. Bear in mind, this is only in the 4-hour, so there's not much hope to have with regard to a trend structure on the 4-hour. So we zoom out to the daily, and basically we see gibberish. Oh, I can't even clear it. I have to reset the page. So we got support flipped resistance, barely any trend structure. Maybe this turns into actually look at the wicks on the daily. All right, this is getting on a time frame that's potentially meaningful. These wicks mean uncertainty, pushing it up in price, and this is actually quite a spread: 68 cents to 78 cents, a 10-cent spread on 78 cents. It's a fair amount of wickage. This is basically a spinning top right here on the daily right now. Today's daily candle, which has 8 hours left in it, which indicates significant uncertainty. And even these candles are indicative of. I mean, the last day, yesterday's candle was indicative of uncertainty. The last couple of candles are. This shit speaks. I have no idea what the hell is going to play out. All over it. All over it. Almost every chart we look at, the trends are like, I have no idea what the hell is going to go on. There's no indication that there's bullishness or even bearishness. It's more like uncertainty. Convex, I wish, had a little bit more strength in it because it's responsible for good VCRV fees. And they'll keep paying because convex is dependent on curve and curve is dependent on convex. It's a synergistic relationship, so they'll just keep paying. But this is clearly a period of austerity. I mean, the horror. I mean, you guys know a fair amount of transparency where I'm at, and it's nice numbers. Who the hell is going to complain about 3,900 a week? But these were larger numbers. These were multiples of salary at one point, and now finally, after all this goddamn austerity and market collapse, weekly income is getting down to. Well, I'd have to go down actually a fair amount more to get down to salary. But it's not to be disappointed. Please, guys, need to treat this as the opposite. This is something to be grateful for. Grateful for this. I would like for it to stop going down. Personally, I'd really like for that to stop going down. I'd like that to stay at about salary, so at least I have the same as my work salary. And I wish it was a little bit more, but the market will turn around eventually. Same situation. Previous support flipped resistance on the TWAP. That's the daily TWAP for convex. This is a very bearish scenario thus far. Look at that resistance, 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 resistance. I mean, it's just pure resistance. How much lower can this thing go? It even broke down from a falling wedge. Don't be fooled on the last couple of days of a little bit of green because look at all this resistance. The technicals tell us truth. They tell us the truth, and it's we must have patience. Any other chart? We can look over Bitcoin and Ethereum real quick. Otherwise, not much else up here is interesting. Let's look at the dollar and 10-year yields real quick. All right, well, it's not going to be fun if bonds go risk off. If normalcy returns to the bond market and we get a collapse of yields down to zero, if we get a sharp collapse of yields down to here or lower, that's going to be very scary from an economic standpoint. So there's a variety of reasons this whole system, not just GDP saying there's a slowdown, but there's a variety of scenarios and conditions in which financial markets can have breakdowns. And a breakdown isn't orderly. A breakdown is like a March of 2020 or a September 2019, or pick a time period in history where shit hits the fan, like zero bid in the bond market, zero bid in MBS, zero bid, and things and in credit markets, and things start to really collapse fast. And that's scary times. So If we see a risk off in the bond market, that could potentially be indicative of something very, very scary. I expect the normal direction, the expected direction for the bond market, in my opinion, is not the typical direction. It's continued risk off, it's continued selling of bonds because it makes sense based on the structural change, the very significant structural changes that have occurred on the macroeconomic scale with regard to geopolitical events, as well as debt to GDP ratios, and just generally capital flows, portfolio structure. And there's a new normalcy in town, and the fact that you're even seeing any support on the TWAP, so that's a previous. It's not even a previous resistance. This is just support, 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 temporarily failed support, support, support. Resistance didn't hold at all. It went right through, and now breakout and then support. So this takes time. This is the daily chart. If you go to the weekly, you're not even close to the TWAP. So there's a lot of support on this chart. So the trend is that bonds are getting sold. I mean, look at what's going on in Japan, and dare we say we have yield curve control contagion over to the ECB. That's going to cause a shit show for the dollar. It's going to crush other foreign currencies. The dollar is going to continue to break out, and the Fed may ultimately be forced to intervene. So the whole market, everything in the market is screaming at the Fed to capitulate on their inflation fight. And they're literally saying, no, we're not going to stop trying to reduce demand. And we're going to risk collapsing every foreign currency around the world. We're going to do all this damage to the global financial system so we could tell people to stop buying shit at the stores. It's the most absurd logical or thought process or thought experiment when you put what they're doing into real terms. They're saying everyone's got to stop buying stuff, and we're going to make it so difficult for you so you have to make less money and you can't pay your bills so you can stop finally buying stuff so we can fix inflation. And at the expense of doing that, not only are we going to fuck you at home with your bank account and your capacity to buy shit, we're also going to devastate foreign currencies, every foreign currency. We're just going to crush them and pulverize them. We're going to provide no support, no financial support. That's crazy what they're doing. Anyway, Dan's in the house. Good morning. Chilled and baked. Lyle was saying the same today. Yeah. It's hard to be real in this market. It's easy to just live in fantasy land and be like all this hopium bullshit that spewed out of maximalists. I mean, even the Bitcoin maximalists are realistic compared to like naive markets like Cardano and Hex and Pulse Chain. It's just naive and people that are just get their money taken from them so badly. And I feel bad. I have empathy for that, which is ultimately why I do this damn stream. But no one listens. Very few people listen to the stream, but at least I'm able to sleep at night knowing that the few people that listen to me still listen to me. Are doing better than worse. Don't forget to make an open mouth, excited face thumbnail. Next 1000x, Kazan. Oh God, that is absolute insanity. These people have psychological complexities that I don't fully understand. I don't fully understand that behavior. Raul, pleasure, Lord of the Pine Cones. Now is the time to learn. The time to buy comes later. Yeah, I mean, you could nibble a little bit. There's nothing wrong with buying things. Just expect it to go down in price. Like, look, me owning a portfolio is kind of like me choosing to buy something, albeit I'm not in a position to liquidate anything because I have capital controls applied to my positions. They're vote locked for years to come. but not selling something technically is equivalent to buying. It's kind of like when you eliminate an expense and you choose not to buy something that's equivalent to income. So there's a variety of ways to spin um, choices we make regarding managing the portfolio during this bearish market. But I generally speaking, I think your statement is the best for most people. This is not a time to buy. This is a time for information asymmetry and to understand the markets. And when there'll be a time when macro conditions are like, you could buy anything, buy the biggest piece of shit asset, and it's going to go up because everyone else is going to buy it. And but you guys, me talking to you the way I do, so upfront and honest. Now you guys know it goes up, you sell it. You're done. Who cares? It goes up 10x on the money, you're out, you're done. But I much obviously prefer to allocate capital towards assets that you don't need to engage with like that. Assets that are real, that are meaningful. And that's what I prefer to talk about. But there's always a necessity for capital gains, and there's always, unfortunately, people that are naive and have that either purposefully or uh, unknowingly engage with markets in the worst possible way. So if you're going to capitalize on that behavior, do it. Sell the shit. If you're going to buy shit, you sell it. And clearly, once again, this is not the time for the market to do anything like that. But that kind of market will return. It's inevitable. Irrational exuberance. You can buy anything and it'll go up. Just sell it. Don't forget to sell it. You don't hold crap. And in fact, holding good shit depreciates. Can you imagine holding crap? Holding crap goes to zero. It's gone. It evaporates. It's useless. It's worthless. The good stuff depreciates. So, what do you got? What do we have in our portfolios? We have stuff that has outperformed the shit out of the market. There's 11,000 cryptocurrencies, and our chosen assets have value, are greater than zero, are producing weekly revenue streams. These are the assets that are outperforming in this market that's absolutely collapsed. Daniel, good morning. Do you follow developments on Polygon? It's been a bit off my radar. Hey, it's not just Polygon. It's a laundry list of stuff. Moonbeam and the Polkadot networks and what the hell is going on in the Cosmos hubs. There's absolutely no way to keep up with everything, which is why some of the best advice I could give is to focus on the things that are the most meaningful. And you're able to find different things that will restrict your need to be too spread thin with regard to information you're looking for. If you try and keep up with the entire market, you're going to drive yourself nuts. So you'll never know all the shit that everyone's talking about. But that's okay. Play your hand. Play your portfolio. Don't worry about other people's portfolios. Seek information asymmetry, especially in times like this, but don't worry. You don't have to win at everything. You don't have to get every single gain possible. All you got to do is do a little bit better than worse, 51%, and you'll do better than the majority. Chilled and baked, wrecked. No, I hope not. Most people that have stuck around my stream have done better than worse. We're able to carve out capital. We're able to at least have working capital. I hope you guys have at least some money that you made during the cycle, 2020 to end of 2021, that you could use to pay bills. At least like 6 months worth of capital to pay your monthly expenses, I hope. And if not, the next time you must think in these terms. You have to treat this professionally. This is not a game. This is not, I'm going to buy this and I hope it goes up. No, this is, I'm going to buy this, and if it behaves the way I expect it to, I'm going to do well. If it doesn't behave the way I'm expecting it to, I'm going to sell it. I'm going to determine that that position or that asset has something wrong about it. And I'm not going to ride things down to zero. Oh my God. The only reason I didn't sell certain assets in the portfolio, one, either capital controls, or two, they pay you. If it was for like Bitcoin or Ethereum, you sell it at the top because you can. There's no reason to hold Ethereum or Bitcoin if it goes 10x on the money, and Bitcoin went 20x on the money, and Ethereum went multiples as well. There's no reason to hold an asset if it's gone 10, 20x on the money. The only reason you hold an asset if it's gone 10 to 20x on the money is one, capital controls, you can't sell it, which is an innovation of 2020. And what has come out of DeFi is MMT and so on and so forth. And also, it pays you. But if it pays you, you got to remember it's still going to get sold. If it doesn't pay you, it's going to get sold hard. It's going to be pulverized. It's going to get destroyed as an asset. If it pays you, it's going to outperform. But as the bearish market approaches, you still got to sell that stuff because, one, you know it's going to get sold because everything gets sold. And two, you got to carve out cash. So you have enough cash on the side to get you from the shit market, the collapsing market, past the time back to a good market. The good market, you're going to make money hand over fist. The shit market, survival. You got to survive. Daniel, not sure if you remember me, but I called you for a consult and your advice saved me from getting wiped out. God bless. I, I, I'm very grateful when I hear things like that. Um, uh, at minimum, I'm hopeful that persons that I've talked with didn't get wiped out. Hopefully, they did better than that. They at least carved out some gains, carved out some cash, carved out some profits. And for myself, I'm trying to psychologically process whether how much multiples from the top is acceptable or palatable. You know, like if you lost 50% of the portfolio, all right, fine, it's not unexpected. But if you're still up like 1,000, 2, 3, 4,000% from 2020, does that balance? What does that mean? Because obviously these are maximum volatile markets. Maybe the 50% drawdown isn't good, or is it good? I think we're still only a couple of cycles into the great volatility of the crypto space that we're still trying to assess what kind of drawdowns are reasonable, considering potentially what kind of upside from the bottom, which is more meaningful, the drawdown or the gain from the bottom. If you're down 50% on the portfolio, but you're up 5,000% from the bottom, what does that mean? How do you measure the goodness, the good or the badness of that kind of result? So there's a lot of uncharted territory here in even just evaluating how we've done with a portfolio in these types of volatile markets. Breakless is in the house. A pleasure. Crypto Jake, good morning. Pleasure. I'm feeling much better. That was crazy. I haven't had the flu since I was like a kid. That is wild stuff. Vince SNX is a cash cow. You know, most people don't know that synthetics created uh, the farming contracts where they could take X amount of tokens and pay, incentivize a position over a period of time. So synthetics created a good part of DeFi. Why? Because the synthetics contracts are used everywhere across DeFi. It's quite a historic thing. I mean, this was late 2019 that synthetics came online and kind of started this whole thing of incentive systems and yield farming, and their contracts were hot. They're still hot. So it is indeed a cash cow. Don, we have to crash the economy to fix the economy. It's absolutely nuts, bro. I understand what they're doing and why they're doing it, but every ounce of rationality in me says we can do better. And like every time I hear them say tools, I'm like, what do you got? One lever? Like, where's the modernity? Where's the computer algorithms and the granularity and the options and the choices and the configurations and the 10,000 different sliding levers? You know, the metaphor that comes to my mind every time I hear this 80-year-old Jerome Powell speak is they got one lever on, off. Old people. What the heck? It's crazy. This is actually one of the only crypto YouTubers I watch. No need for Moon Boys. You know, Moon Boys. Are they entertaining? You know, I like Murden. I like Nicholas Murden. You know, every once in a while, and I still like Chico. I don't watch them much, but you know, Nicholas at least pulls up some decent technicals, and I think is reasonable. Chico's Tyler over at Chico's. uh, He's seems like a decent guy, a little unstable at times, but there's nothing wrong with that. We all are. I think uh, it's quite consistent with content, and he's been able to come up with content in a bear market. So you know, there's something to be said about that. There's very few people that talk crypto that uh, you know, of the crypto community, of the crypto crowd that I really have a reason to appreciate. And I guess the two of them, you know, I can understand why they do what they do. I can understand where they come from when they create their content, and I'm like, all right, fine, I get it, I get it. You know, the word is palatable. They're palatable. I could accept what they do. Um, Noah, thanks for keeping it real. We appreciate you, sure, sure. You're very welcome. And I look forward to having different content when we have a bull market. I look forward to saying, yeah, look at this asset. It's going crazy. Look at the yield on this thing. We're having so much fun. Who's going to the store and buying a PS5? Because we'll have that kind of market. We'll have that. It's inevitable. It's destiny. It's not right now. That's not the type of market we have right now. I mean, we had some fun times on these streams and on Discord and dealing with craziness in the markets. And we were looking at technicals. We were waiting for trend breakouts. We were breakout hunting. We were getting yield. We were doing cash and carries on Aave when they were throwing around incentives. It was wild. It was total financial Wild West. It's crazy. But that's not this market. So here we go. Don't be fooled. The fucking financial system is imploding like one of those YouTube videos of an apartment building completely imploding. Clicks equals money. Yes, that is true, Robert. But I don't really do clicks on YouTube. I don't monetize YouTube. If you notice, there's no ads on YouTube. So the only thing I monetize is Discord. That's it. That's my only additional revenue stream. So I very much appreciate if people actually don't just all cancel. Would like to keep a couple of people on in Discord. That'd be nice. All right, fine. That's maybe one thing I look forward to when the bull market returns. Actual people that want to do better and they stay around and they participate and they don't just up and leave when times get tough. Thanks for doing what you do. There should be way more people listening too. I would hope so, Damien, because I definitely think we could do better. And my content surely is not like the majority of crypto YouTuber content. Hey, no, I have some book recommendations about topics you talk about, and maybe monetary policy, staying rational, or something else curious. Realvision.com. Um, you could mostly it's just Twitter. You could read Lynn Alden's monthly reports. Those are off the hook. And Luke Groman's content is wonderful, but I just get a kick out of his Twitter. I understand. And I basically compile most of these wonderful macro thinkers' ideas in my tweets and what I talk about. And literally, just my opinion of macro is really just a compilation of something that has emerged from me digesting their ideas and putting my own spin on things and understanding things the way they function and operate. And so this is very much a lot of content that I provide as a derivative of Luke Groman, of Raoul Powell, of Lynn Alden, and to the extent that I understand Jeff Snyder, and I do, I understand a lot. We talk about Eurodollars a bit, and I'm pretty much the only one who talks about OTC derivatives. So maybe I do offer something a little bit unique in the crypto space, or maybe even the macro space, for all I know. Do you have any advice for Ethereum right now? I'm just holding it, but I'd like to put it to work. I don't think there's anything worthwhile to go out on the risk curve for with regard to Ethereum. I think the potential asymmetry is there with the merge, and it's a massive asymmetry because right now, proof of work has a much stronger argument in macro talk. Like traditional finance. Proof of work has uh, uh, has a function that doesn't exist in traditional finance, whereas proof of stake is much more analogous to existing systems. So the asymmetry is there because if Ethereum does well, and it proves that the proof of stake that Buterin came up with is innovative and meaningful in some regard, then and it would run counter to the way people in the macro world and traditional finance think Ethereum will play out. So if it does better than the way people think it will play out, that is a very much asymmetric bet unto itself. So I wouldn't risk Ethereum as an asset. I wouldn't try and leverage it or generate capital from it. And it's purely capital gains right there, unless it's you know producing 5, 10, 15% on a node level when 32 Ethereum you're able to stake it. If that 5, 10, 15% on a node level, if that's what you're getting, if that's a meaningful revenue stream, that's cool. Otherwise, if it's not, that's really just a capital gains play. I wouldn't hold on to it if a node is producing what, a 200, $300 a month, I probably wouldn't hold on to it. But if you're going to get 10x, 20, 30x on the principle of the position, there's no reason not to capitalize on that. So I don't know. I don't know the perfect way to play Ethereum. I don't have an Ethereum position. I do think of 32 to operate a node, but then I think of opportunity cost and how that capital might be better served elsewhere, like protocols on the Ethereum network, such as Curve and Frax, and predominantly those. Um, so I have a very concentrated portfolio. Anyway, I don't have a suggestion. I probably would do nothing. That's probably what I would say, Daniel. Do nothing. Either have Ethereum because you think it'll stabilize, or you don't because you think it will have more downside. I mean, this is just wild downside, and I don't. I have not made any statements regarding further downside or it finding a bottom. I'm not the type of person that does the stock to flow. I'll throw on the log scale. I have no idea where it finds bottom. The market will tell us when it finds bottom, when it stops going down and starts going up. All right. And I don't want to take the risk. What matters, Daniel, is you can have Ethereum, just like I have other assets. But do you have enough cash to pay your bills? And if you do, that's okay. That's okay. It's okay to watch your portfolio go down in value if you've carved out enough cash to get you through the shit period of the market, to get you back to a period of the market which just is easy money. So that's where I'm at as well. I've been watching my portfolio go down. It's not unexpected. But it's nice when the portfolio is generating returns through that period of not good market. I mean, this is actually just wild from a technical perspective. The RSI on Bitcoin is the lowest it's been since 2012 on the weekly. That's crazy. So there's something to be said about a potential bottom on Bitcoin. That's crazy. This is the most oversold Bitcoin has been on the log. No, on the chart, on the Bitcoin chart, period, since 2012. That's how oversold Bitcoin is. That's wild. Let's zoom in on the not log chart. Interesting to see that it's above previous all-time high on the weekly, which was December 11th, 2017, which topped out a little less than $20,000. This is just a wild chart. It's just a wild chart. And it's going to be really wild to look back in 10 years to see what it does. Let's go out to the monthly real quick. I want to see what the RSI is. This is the lowest level on the RSI of Bitcoin on the monthly since 2012. Since 2011, August 1st, 2011, this data goes back to on TradingView. That's crazy. It's an absolute wild chart. This is going to be a wild summer. This is going to be a wild coming 2 years. This is going to be a wild macro setup for what the hell they're going to do at the federal level. It's just crazy times. It really is. We're going to wrap up the stream in a couple minutes. I'm rambling a lot today. 44 people in the stream, 25 likes. We can do better. The best crypto stream. Thanks for sharing. Your bear market content is even better than bull. Very helpful. It's a pleasure. I hope it is. Do you change your gauge weight vote on Curve each week? Yes. No. I did. I did vote for Stargate last week, and I voting for Convex CVX FXS this week. And you change your vote when it warrants change. You could change it every 10 days. That is correct. You could change it whenever the protocol says you can. It's about 10 days, but keep an eye on it. I don't really remember when I last changed it, but when you go into the gauge weight vote page, don't forget number one, reset. You gotta reset, and then you refresh this page. Make sure it says 0. If that transaction fails, you're not voting, and then you can vote. And then there's a bit of an error message if you voted too often. You'll see it at the bottom here. You see, transaction may revert. Do not proceed if it says this. Then wait another day. And you got to wait around 10 days, I think, is what the contract requires. I think it's less. I think it's every 7 days. But it'll just fail if you vote and you have not reset and you have not waited adequate amount of time. Killis is in the house. Always a pleasure. Hope everything's good. Been quite a while. Overall, I managed to carve out some decent capital. However, I might have extended some positions and locked them up. Yeah, I wish, with hindsight, identify what you need to do better next time. I should have carved out more capital. I should have been more patient. I should have taken fewer positions. I should have been more concentrated. And I made the right choices of the right assets. They were rational and they were the right assets. The biggest thing I probably should have done was carve out more. And definitely concentrated more. I had a lot of smaller positions like fixed forex. I could have skipped over so many damn positions, and I would have saved a lot of money. And I just had too diversified of a portfolio. I was caught up in like, oh, asset craziness. There's so many things going on. What to buy? What to buy? Like everyone. I'm like, I gotta own all these cool things, and then no, you don't have to own the coolest thing in the room. And I would have done better if I didn't own the smaller projects outside of the core portfolio. 2, 3, 4 assets. That's all you need. The more assets you have in the portfolio, you're taking on more risk. Harder to manage. Inflation is the only story. You guys are fortunate in the U.S. Inflation, Q2, Q3. Yeah, I know. Uh, Yeah, we got horrible things going on in Europe, and I've been working with a charity, very peer-to-peer charity in Africa and Sierra Leone, and it's just horrible around this planet. It really is. I have 2 children in Children's International and a bunch of other donations I do to like children's hospitals and stuff. It's an absolute tragedy out there, so we are very lucky in this country indeed. Igor, hey Noah, Avalanche released their new Chrome plugin. I saw that. I have no interest in trying it, but it looks nice. That's good. Good to see. Um, that's it. That's it. It did look cool. Look very nice. Raul, do you think Abra has the juice to survive? I think they're right on the line with regard to survival, which is disappointing because the technology is really nice. I like what they do, and I think from a tech perspective, it's very meaningful, and they really deserve to survive. Abra, the entire team, including Daniel, they did great. They had made a great product. Tokenomics probably could have been a little bit better, but it's not unexpected. 95, 99% appreciation. It's what every coin does. Maybe paying out the mem would have done better with regard to a little bit of price buoyancy. So there could have been a little bit better support on as the market completely collapsed. Didn't so they Daniel was too diversified. Look, he did Abra and Popsicle and Wonderland. Man, it would have been better if he concentrated. He didn't need Wonderland. Wonderland, that was just a tragedy. And Popsicle, brilliant technology in Popsicle, and Popsicle is a big part of where I think tech needs to head, seamless cross-chain liquidity provisioning, but it was just too diversified, and Popsicle has been decimated from a price point perspective. You really need to focus on one project, and it's very much comparable the way the developers need to look at their workload and the way we need to look at the projects we have from an investor standpoint. Is there a proof of work based smart contract platform? Yes, which is StakeNet. I'm sorry, not StakeNet. Syscoin, NEVM, which is Bitcoin secured DeFi. I mean, it's in multi-chain. It's, I mean, it's, um, oh my God, what's the name of the DEX? I can't believe it's hard to remember everything that's going on in the crypto space. But look, Syscoin. So, Syscoin DEX. Pegasus. What does this look like? This looks like Uniswap. Because it is. It's a Uniswap V2 fork. But this right here is a DEX. How do you get to it? You get to it through a bridge, just like everything else. There's a lot of shit you could go to. And you can transfer USDC to Syscoin. And then you could go on Pegasus. And it's a DEX. This DEX is secured by Bitcoin. So, Don, that is a proof of work smart contract system. Syscoin has NEVM, which is their Ethereum virtual machine on top of the Syscoin blockchain network. And Syscoin is merge mined with Bitcoin, so it's a Bitcoin secured Ethereum virtual machine network. Pock Angel, no. Well, Uniswap as a technology, yes, is extraordinary. Uniswap as a token is worthless. It's useless. There's literally zero reason to own any UNI. Happy to finally catch you live. You've been loving your cool-headed approach over the past year. Any change of opinion about Chainlink having a role in a portfolio since staking was announced? Staking was announced 2 years ago. So when it starts to produce 20-30% ROI, APR, and then you have derivatives where it's becomes fungible maybe, or it becomes at least collateralizable or composable, and that 20-30% has, a CVX link. CVX link. Oh, that'd be interesting. So, but there's nothing. Nothing exists. So it's for me. There's no point. It doesn't do anything in the portfolio, and I don't want just an asset sitting around hanging out, hoping it goes up in price. Those are the assets that get sold the hardest. So when it starts cranking out 20-30% return from platform revenue, then my interest will change. Jesse, you have a good one, a pleasure. I know it's a long stream, but I like answering you guys' questions. Pock Angel, I had $200K worth of Stargate, and now they're just 25K. What I did wrong? Well, Stargate doesn't have any revenue; it doesn't pay people. So you got to watch for reasons for people not to sell. Why would people sell it? They'd sell it because the only way they're going to capitalize on it is if they sell it, because the asset's not paying you. Why would I sell? Why would I not sell CVX CRV? Because it's paying you 35% of the money. There's a reason to not sell it, which means it's going to sell less than something else that's paying less. Something paying you 35% is going to sell less than something paying you 25%. It's going to sell less than something paying you 10%. It's going to sell much less than something paying you zero. Something that pays you zero is going to sell hard. And how do we know that? It's right in the chart. Something that pays you zero is going to sell hard. Bitcoin pays you nothing. There's no revenue, there's no money. You just watch your portfolio evaporate. So, I mean, look, I've watched my portfolio evaporate, but at least it's paying out, which pays the bills. You watch your portfolio evaporate here, it's not paying anything. Not paying any bills. So that's the deal. When's the right time to sell? For assets that pay you nothing, the right time to sell is when it's made a lot, when it's up multiples. You just get rid of it, because anything that's not paying you anything is going to get sold, and it's going to get sold hard. Good evening, Noah. Fran Corp, a pleasure. Left side, Liam. Unfortunately, that thesis didn't hold true for most cash flow assets like CVX, CRV, and CVX. No, the thesis did hold true. Those assets sold significantly less than other assets. Look, here, put that into perspective. Look at this chart. You see this chart on CVX? This outperformed the market. You realize from $60 to $4, this chart right here did better, massively better than the vast majority of assets in the crypto space. So, left side, Liam, my friend, this is the wild thing. The vast majority of assets in the crypto space are fucking dead. Completely dead. They're zero. They're worthless. They're useless. The fact that this still has value and is still meaningful means everything. It very much held true. The thesis is spot on. Michael, morning, Noah. Pleasure. Last question. I'm going to wrap it up. What are your thoughts on Frax base pool? One of the most exciting things going on right now. I have a very high opinion of Frax. I think he's very smart. I think Sam is very smart. And I very much look forward to a crypto native stablecoin. I would love to see how the future unfolds for the algorithmic portion. I like that it's backed by USDC, so it's backed by a secure dollar-backed stablecoin. And I think if it was 100% backed by USDC and just FXS was used as the protocol's capital management slash incentive system, that would be adequate unto itself. But the fact that they could do that, the protocol can edge out into risk territory by going a little bit more algorithmic, which is very nice where it's at right now. What, 9, 10, 11% algorithmic? That's so cool. That's cool tech because it's smart. And it's going as far as it can while maintaining the stability and the functionality of the system. And that's what I appreciate the most of what he designed. And the AMOs, and it's all automated. It's very smart the way it was designed. So I very much look forward to Frax over the coming years, and I'm very excited about the base pools. So I definitely voted yes on that stuff. Is Curve outperforming BTC by a lot? Well, you can look at the price point, but the price point will drive you nuts. So we don't have the history. We only got we don't have enough history with regard to price point. So Bitcoin's up 100% since October of 2020. Okay, let's put it that way. So here, October of 2020, curve was 30 cents. And so, yeah, it's not outperforming Bitcoin by a lot. So 60 cents, about 60 cents on Curve would be 100%. And Bitcoin's up 100% since October of 2020. And Curve is up 100% on the money since October of 2020, plus a little bit more. It's at 70 cents instead of 60 cents. But Curve's paying you 50% on the money. It's a big difference. So it's up the same amount as Bitcoin, yet it's paying you every week 50% APR cash flow that you could use to pay for the mortgage, for your car, interest payments, whatever, food. It's paying you from the cash flow of the protocol. So that's something that's quite interesting. That Curve has done the exact same performance as Bitcoin over the last 2 years since October of 2020. I mean, it's right here. Look, October of 2020, Bitcoin was 10,500. October of 2020, this curve was 34 cents, 33 cents. Curve is currently at 73 cents, which is, let's say, 100%, 110%. So this is about 100%. It's about 20. It's 10, 20. So Curve has actually outperformed Bitcoin since October of 2020, while also producing 50% APR paid by third-party sustainable revenue streams. Food for thought. Let's wrap it up. Wednesday, June 22nd at 12:41 p.m. As always, thank you all for joining me. Tell everyone to subscribe. If we can help one additional person, it means everything to me. I wish you all a wonderful day. It's Wednesday, so I'll catch you guys on Friday. We have one more wonderful stream for the week. After party on Discord for the most rational community in the entire crypto space. During the bad times, during the good times, we have good conversation, and I think it's a great place. It's going to be even better during the next bullish market. I wish you all a good one. I will see you on Friday. Peace.